is out to disrupt the personal loan market and is currently exploring the possibility of a listing later this year or maybe next. For more on what the company is setting out to achieve in the year ahead, Now Finance MD Richard Blumberg joins me at the desk. How are you, mate? Good to see you.
Thank you. Good to be here.
So tell us about Now Finance.
Now Finance is a personal loan specialist. We focus on providing personal loans to consumers right around the country. We compete directly with the banks, and so our whole offer is about having a competitively priced product, outstanding customer service, and a positive customer experience.
Gee, do you think the banks don't deliver that kind of thing?
No, we don't.
I thought you might say that.
That was the motivation behind putting the business together. So 5 years ago, we saw that opportunity. The personal loan market is a very large market in Australia. It's non-core to the banks. The banks would far prefer to give you a credit card or a mortgage. And so the service levels are often lacking. The customer experience is often poor, and sometimes the product is mispriced.
I was going to ask that question. Have credit cards in recent years sort of taken away the popularity of personal loans? Because when I was a younger man, personal loans were very important. Credit cards were pretty insignificant.
Absolutely. I think that's right. And certainly the personal loan market in the last couple of years has shrunk, which is interesting. So credit cards have, but we've positioned our product, average loan size is between $20,000 and $30,000. And so that's a little bit big for a credit card. And so we've done that on purpose. We feel that our product is relevant and appropriate for customers who need financing for things like home improvements, home furnishings, motor vehicles, watercraft, debt consolidation, travel, where the expense is high.
So if we talk about car loans that, say, banks might sell, are they really just personal loans called car loans, or are they specifically different?
Car loans are specific to new car loans where rates are quite aggressive, quite low, and that's a different market in itself compared to what we think of in terms of personal loan, what a personal loan is.
Okay. So give us the industry definition of a personal loan then.
A personal loan is a loan, in our case, between $4,000 and $40,000. As I said, average loan size is about 20 to 30. The term is between months and 7 years, and it's for a particular purpose. So that purpose varies, but typically it's those that I just described.
The range of interest rates for your personal loans, because you're a disruptor, I'm presuming you're a little bit cheaper than your rivals?
Our focus is middle Australia, the mid-market, and our rates are between 9% and 16% for an unsecured personal loan.
Okay. But 16 at the top end, what would be the criteria why someone would have to pay 16?
So in our process with the customer, we will offer them a rate up front, and that depends on their credit standing. So in the background, we check their credit file, importantly without leaving a mark on their credit file, which is an important point. And we, based on their credit history and how they've behaved and their credit score, will offer them a rate. If they have a good credit history, we'll offer them the 9%. If they have an average credit history, somewhere in the middle, and if it's an okay credit history, at the higher end.
Yeah. So your rate will be determined by your credit worthiness.
Correct.
My initial thought was, well, if I'm young, I haven't got a house, and therefore I'm going to be more likely to look at either credit cards or personal loans, because if I've got a house, a lot of people are using the equity in their home loan. But a hell of a lot of people aren't becoming homeowners because they can't buy what they want to buy and prices are very high. So is the market growing for personal loans?
No, it's not actually. It's shrunk.
So people are using credit cards instead then?
Possibly, and also I do think that the point you raised about mortgages and people drawing down on those mortgages or having equity or refinancing their homes that have gone up in value is a factor. Interestingly, from our perspective in WA, we've seen a resurgence of personal loans. Why? Because that property market hasn't been great, and so for people to actually go and just draw on their mortgage is not necessarily a viable alternative. So we've actually seen real growth in WA. For that being one of the reasons.
clearly lately there's been some activity from overseas using famous American actors who aren't bad impersonators of Donald Trump.
Yeah.
You know, correct me if I'm wrong, but is that a derivative of GE, that particular business?
It was the old GE, exactly.
Okay.
So it was bought by private
And GE
equity.
has often been in this space.
Yes.
And then exited after the GFC, didn't it?
Well, no, they were here and they stayed here. And so parts of their business did change over time. But they had a significant, and still do have a significant personal loan business, now called Latitude and owned by private equity. They are one of our competitors in this market. I think it's quite important that we are quite happy to have competitors. In fact, it's about building out the viability of the sector, which is the alternative to banks, that there is a credible alternative out there. You don't have to go to your bank to get finance. You can actually shop around. And that's important.
How are you marketing now, folks? Clearly you're on this program, but you have a more complete marketing strategy.
So we do.
Yeah. So what are you doing to market?
We don't have the budget that other mob has, but we do focus.
You do.
We do focus on above the line, so TV, outdoor advertising, but digital. So digital for us is an important factor. Consumers, when they are considering taking out a loan, will shop around and they will look at the rate comparison websites. And so that's a very important part of our strategy is our digital marketing strategy.
How good do you think Australians are in actually going to these interest rate comparison websites?
I think they're getting better. So we've done some surveys amongst our customers, and it's a growing trend. Customers will go to those rate comparison websites as part of their shopping around, and so I think that's a growing trend, and I think it's a good thing.
Yeah, I suspect finder.com.au has probably improved people's understanding of that, because there've been good websites around for a long time who weren't very good at marketing, I think, and these guys.
They certainly are.
Yeah. Okay, so there's talk about you listing.
Yes.
What would be the key drivers for you to list?
We've grown significantly over the last couple of years. As you grow, as your book grows, you have to grow your own balance sheet. And so that for us is a consideration. We need to raise more equity, and listed markets we think are the right place to do that, because we'll always be capital hungry. As we grow, we have to grow our balance sheet. The markets do these sorts of businesses quite highly. So it is an alternative for us. It is something we're thinking about. The business has to be ready. As you know, when you come to market, you need to have a level of maturity where you can absolutely deliver on your forecasts. And so that's what we're thinking about. Is it this year? Is it next year? When are we quite ready to go? And but I think listed markets are definitely a viable alternative for us.
What kind of economic environment really suits the personal loan type product? Is it a growing, going gangbusters economy, or is it one where tightness is starting to come in and lending criteria is becoming tough?
That's the environment we have experienced, right? And we've managed to grow in that environment. I think typically, if you look at markets, that gangbuster growth environment is obviously conducive to growing a loan book. However, I think certainly in our case, we have grown the business in a different environment where it hasn't been gangbusters, it hasn't been growing, it hasn't been strong, and so I think from our perspective, it's more about positioning ourselves as a viable alternative to the banks and taking market share away from the banks. We don't have to have the sector grow to grow, which we've demonstrated.
So I guess what you're saying is that you're looking forward to a gangbusters economy just to see whether life is actually easier than it was in the pre-gangbusters environment. Well, Richard, it's been good to meet you, and good luck with the business, and let's hope we see you list one of these days.
Thank you very much.
Okay, so after the break, Tim Olsen from Olsen Irwin Gallery gives us the 101 on art dealing as well as investing, and we'll also talk about his dear old dad's exhibition on right now.
Good morning, welcome. All right, we'll take it.
Oh, you're good.
So good.
He's the car whisperer.
Get a free auto upgrade across the Golf, Polo and Jetta range with Volkswagen Choice. It's a deal so good.